Chewy's a good investment. I don't know, but we're going to find out together. My name is Brian Feroldi, and on this series, Brian Stoffel and I take a stock that we've never researched before, or in this case, haven't researched enough, and we run it through our investing checklist. So you're going to see us dig into SEC filings, look at investor presentations, all in an effort to figure out if this is a company that we think is worth investing in for the long term. Brian, what stock are we talking about today?
Today, we are talking about Chewy. I believe the ticker symbol is CHWY. I believe that it is a subscription pet food company. I have no pets, but my wife and I both absolutely loathe dinner. I think once our kids are at school full time and we can work on making dinner, then it won't be such a task. But right now, if there was a human alternative that was healthy and easy enough, that wasn't just ordering out, I would get Chewy for humans.
Okay, he would get Chewy for humans. Yeah, I know this as a company focused on pet food and pet products and supplies. And I know some people that whose opinion I respect really like this company. So let's dig in.
As a stock, I'm just curious, as a stock or as a product?
Both.
Okay.
But yeah, I'm not a pet owner. You're not a pet owner. So we're not in this company's target market. But I do know that pet spending is very recession resistant, has a long-term growth tailwind behind it. So let's see.
Yeah, not only recession resistant, but it is pandemic proof.
Yeah, that's right. Yeah, that's right. We are choosing Chewy's today because of a poll we did on our channel. Thank you so much to our channel members. And as usual, our video is sponsored by StockCard. Thank you, StockCard.io, for sponsoring the video. So the ticker is CHWY. Yes, Chewy. Okay, so we're going to click on intro. Chewy is the largest e-commerce pet care retailer in the U.S., generating $7.1 billion in 2020 sales across pet foods, treats, hard goods, and pharmaceuticals. They sell pharmaceuticals too.
That's interesting.
The firm was founded in 2011, only 10 years ago. Okay. Acquired by PetSmart in 2017 and tapped public markets as a standalone company in 2019. So it has an interesting corporate history there.
Yeah, that is interesting.
It's a spinoff. After spending a couple years developing under the aegis of the pet superstore chain.
All right, Hoda, you're working aegis in there. Way to go.
The firm generates sales from pet foods, treats, over-the-counter medicines, medicine prescription fulfillment, and hard good flakes, crates, leashes, and bowls.
So basically, food, accessories, and medicine.
That's my read too. So it's a $20 billion company. Oh, wow. Earnings, free cash flow, PE ratio, but I'm going to assume that is earnings are super depressed for some reason or another. Okay. Let's go down. Sales growth, current year, 44%.
That's pretty good.
21% revenue in their most recent quarter. 3-year compound annual growth rate of 50%. Shoo. Pretty good. Revenue growth estimate is 25. Okay. Last year, EPS of negative 23. Last 12 months, EPS of positive. So they seem to be right on the cusp there of profitability.
I think it's really going to depend on looking at the dynamics there. When stuff moves around like that, I'm not sure. You got to look closer.
Sure.
Before you go any further, I just want to say welcome from Saudi Arabia and Peru. We've got 2 viewers viewing from there right now.
Hey,
welcome
awesome.
to our channel.
Awesome. Gross profit here, 26%. Pretty low. Not surprising given that they're selling pet food. And that's a low margin grocery item.
Yeah.
Right. Cash availability, a good current ratio, no long-term debt.
Hey,
positive free cash flow, return on invested capital, 36%.
What do you think of that?
Wow. How are they getting that if their earnings are negative? I don't know.
Well, see, that gets into those wonky things that can happen.
Yeah. Yeah. So hard to say. Past investment. Its return over the last year is minus 34%. That's because it's a growth stock and fair value. Okay, let's go up to the company's investor relation page. Here we go. So today's date, CHWY. Today's date. Does this company have recurring revenue? Is it profitable? I'm going to say yes. Is it beating the market? I'm going to say no.
If it's down 60%,
yeah, it's down 60%. And is it free cash flow positive? I'm going to say yes. And for recurring revenue, I'm going to say yes. I'm pretty sure that once you sign up, you're like, you're regularly, dog food is something you need to continuously buy if you have a dog.
Yeah.
Same thing with pharmaceuticals and all of that such. Chewy's $7.15 billion in 2020 sales. Okay. Our mission is to be the most trusted. Can you read that okay?
It's a little small.
Okay. Our mission is to be the most trusted and convenient online destination for pet parents everywhere. Is to be the most trusted and convenient online destination for pet parents and partners everywhere. So it's a competition-focused mission.
Yeah, and I'm not crazy about that, but if they just said to be a trusted and convenient destination for pet parents everywhere, I mean, it's still not great, but it's not bad.
Okay. Plus one for putting it on their website. It is simple. I'm gonna go with not inspirational.
Yeah,
2 out of 3 on mine.
I'm trying to think about how it could be better to. I don't know. To allow you to focus on just being a pet parent.
We view pets as family and are obsessed with meeting their needs and exceeding customer expectations. Launched in 2011, we offer personalized service. The personalized service of a neighborhood pet store, along with the convenience and speed of e-commerce. Customers love shopping our wide selection of products of more than 45,000 items, including private brands and prescription RX food and RX medication products, which we offer at competitive prices, fast 1 to 2 day shipping, and around-the-clock convenience that only e-commerce can offer. Chewy's commitment to customer service is at the core of our brand, and our customers love us for it. We wow pet parents through 24/7 assistance, advice, and encouragement every day of the year. We make pet parenting easy with our convenient auto ship subscription program.
Ooh, that's very interesting. We need to find out a lot about that.
That's the recurring revenue, which allows our customers to schedule their orders so they never run out of pet food supplies and medications they need. As an e-commerce company, product innovation drives our operations, and our team is constantly striving to find new and better ways to improve our customers' experience. From an easy-to-navigate website and highly rated mobile app and detailed order tracking to personalized pet profile, we are transforming the way pet parents shop.
I'm going to go with Brandon and just say my ideal mission statement would be to make pet parenting as joyful as possible. That's what I would.
To make pet parenting joyful.
Yeah. There you go.
Great. I see that Chewy expands into pet insurance.
Mm-hmm.
Partners with Trupanion. +1 optionality.
Yep.
Will that work? I don't see why not. We got a shareholder letter.
Love it when we get shareholder letters.
Okay. All right, let's start poking around. Financials, annual reports. So we'll pull up the 2020 annual report, the proxy statement. Okay. Governance, we'll look at the executive management team.
I gotta believe the founder's no longer involved after that.
I can't imagine.
After that weird winding road the company's gone through.
Yeah. Let's see if we click on events and presentations. Just shareholder letters.
Yeah. Too bad.
So we don't get anything pretty, at least not easy. Investor. Usually, sometimes they have like a link right on here to it. All right. We'll do it.
Is what it is.
We'll do it the hard way. Okay, so this is the 2020 annual report. So this is old, but a lot of the stuff will be
newest we can find.
Our mission to be the most trusted
same.
and convenient online destination for pet parents and partners everywhere. Cool, consistent, and apparently that includes bunnies.
Hey, that's the one pet I've allowed. My wife and I have allowed a discussion to happen around.
Okay. Overview. We began in 2011. Chewy LLC was formed. Okay. In 2017, it was acquired by PetSmart. We completed an IPO in 2019. Okay. We were during the year 2021. We were controlled by PetSmart.
So they rolled them out, but they kept a huge chunk of their shares for themselves.
PetSmart is wholly owned by a consortium, including private investments by BC Partners, Lacasse, blah, 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 a whole bunch of thing.
People in
Longview
Canada.
SMA. So it's a private company of sorts that's publicly traded. It's controlled by a private company.
Yeah. They're
Right.
making it possible for their private equity to sell out when they want to.
Right. Okay. PetSmart completed a financial transaction. In completing with such transaction, all shares of our common stock were distributed to affiliates of BC Partners.
Oh.
Okay. PetSmart no longer indirectly owns any shares of our common stock.
Okay.
We are
All right.
no
So they did
longer
that.
a restricted subsidiary of PetSmart's credit facilities and indentures. Okay. So
Interesting.
they're broken out now. It's
Mhm.
complicated history, but they're their own thing now. But we'll check the proxy. Okay.
Or the proxy should incorporate that if it was February.
We believe that we are the preeminent online source for pet product supplies and prescriptions as a result of our broad selection. We offer at highly priced, competitive prices, deliver with an exceptional level of care and personal touch. We continuously develop innovative ways for our customers to engage with us and partner with approximately 2,500 of the best and most trusted brands, 70,000 products, a high bar customer experience. Okay. Operate in large and growing industry in the U.S., comprising of pet foods and treats, pet supplies. I wonder if it's just the U.S. They say it's just the U.S., so I wonder if there's any international.
Their mission statement says that they want to go international because it's everywhere.
Pet humanization, no doubt. More than 90% of pet owners consider pets to be a part of the family. 73% of pet parents are willing to spend more on high-quality foods that are viewed for healthier for their parents. 73%?
I believe that.
Wow. 3 out of 4 are willing to spend more on organic foods for their pets. I don't think 73% of families are willing to spend on higher quality foods for themselves.
Yeah. Well.
Okay. Spending on the oil pet market is $73 billion to $98 billion, growing about 5% annually. The market's going to grow about 6%. Pet food sales and treats are 3% higher. Okay. Spending on pets is a necessity, and most customers purchase frequently and at regular interviews. The pet industry is one of the most resilient categories during economic downturns because of the nature of the pet-parent relationship. Overall spending dropped 12% in the U.S. Entertainment decreased 12%, and 1%.
But
Pet spending
increased
by 6%.
Wow. That's fascinating.
Yeah, the pet industry experienced a significant increase in demand as a result of COVID-19 pandemic. Pet adoption and fostering surged with stay-at-home. I know many people that got pets during the pandemic.
Oh, yeah, absolutely.
There was a run on pets, which means their 2020 numbers are likely to be very elevated. And what's the numbers going to look like in 2022 on a normalized basis?
Right. It wouldn't be about, they should stay elevated because you don't feed a pet once and then you're done. It's just that the growth will be tamped down, probably.
Right. Rapid slip to online shopping. Yep. Okay. Online shopping grew 4% to 27% with 10 billion of pet foods and treats sold online. That's a 40% compound annual growth rate. Is increasing up from pre-pandemic of 24%. Okay. So 34% of the pet food market is online by 2024, up from 24% pre-pandemic. So about 1 out of 3 are estimated to buy online by 2024. Okay. 64% of Carton agreed that more of their everyday spending was being done online. 73% they feel safer buying online as opposed to in a store.
Well, look at when this was done.
Contact us.
That's
sure.
just silly. It's April 2020.
58% of dog owners like the idea of home delivery for pet food and over the past 12 months. Pet food, dog food's heavy. When you get those bags, they're heavy. Increasing subscription-like behavior. Okay. Chewy's strengths, customer-centric. Everything about the company is organized around a commitment to provide an exceptional customer experience. Okay. Customer experience expertise that is knowledgeable and empowered. Our customer service reps share a common bond. They love pets. That shared passion is evident in every transaction we have with our customers. The moment they join Chewy, our CSRs receive extensive training from our knowledgeable team. We're in the ins and outs of pets and pets products. They can.
Wonder if you're required to own a pet.
Like 70%, I don't know, a whole bunch of people own pets. So I'm sure it's not hard to find people that have pets that want to work there. engaging with customers on a personalized level. We empower our CSRs to go above and beyond for our customers, and they do so with the knowledge that our commitment to our customers is our number one priority. We engage with pet parents thousands of times a day, and we embrace the opportunity to wow our customers each time. From surprising them with a hand-painted pet portrait to sending flowers to a family who has recently lost their pet. We have developed integrated technology that enables us to capture personalized profiles for each of our customers as well as their pets, so they provide them with personalized recommendations. Side note,
yeah, go ahead.
If they know them that well, that lends itself to pet insurance.
Yes, that's true. The two things I was going to add to that, one is that reminds me of how Zappos got started, where you just said, you know what, you can do whatever. The second thing I want to add to that is I used to get clothes from Stitch Fix. I tried it a couple times, and they saw on my Twitter profile when my son was born, and they sent, I didn't do anything. They sent a Brewers onesie with a handwritten note to our house after he was born, because I put something up on Twitter about it. It's impressive.
Wow.
Now, I haven't been back to Stitch Fix since then, though. So,
okay, they offer the widest assortment of pet products available of any pet specialty retailer, and we offer them at competitive prices. 2,500 carefully selected brands, free educational materials, so inbound marketing, 2 innovative ventures to add that are valuable additions, healthcare business, and represent a first service-based offering for pet parents, medication compounding, and a telehealth service. Connect with a vet as part of our goal to make pet healthcare more affordable and accessible to our pet parents. Look out, Teledoc. There's another game in town.
Yeah. I mean, compounding just means putting together the
medications.
drugs,
Yeah, making a specific medication.
Right.
Like there are compounding pharmacies.
Right, exactly.
Where you can get custom-made drugs for yourself. Sometimes, for example, if you want like them to be if you have like a liquid and you want it to be flavored, you can take it to a compounding pharmacy. Okay. Our highly efficient and effective distribution network provides exceptional delivery with ongoing cost advantages and superior customer service.
I want to know more about that.
Strategic placement of our fulfillment centers across the U.S. enables us to cost efficiently ship over 80% of the population overnight and almost 100% in 2 days. The high volume of our sales, high participation rate in our auto ship subscription program, and relatively low seasonality allow us to optimize asset utilization across our network and lower our fixed and variable cost per unit and inventory levels. I will buy that they have a cost advantage over upstart rival online pet food delivery.
Yeah.
Do they have a cost advantage over Amazon?
Don't know, but if 3/4 of people are willing to spend more on food for their pets, I believe that 3/4 would be willing to go to Chewy over Amazon. I'm curious if they have a cost advantage. In our comment section, people have talked about ticker symbols bark and woof and whether or not those are going to take away market share. And so what I want to know is, can bark and woof do the same thing for the same internal costs? It might be hard for us to figure out, but that would be my question.
We also deploy capital efficiently. We invest cash flow generated from our existing customer base to attract new customers. Given the fast and consistent payback levels, we invest free cash flow in marketing to attract new customers. We continue to invest in technology and product innovation to continue scaling our platform. Okay. Our technology platform is scalable. Yeah, it's an e-commerce. Yep. How do we grow? Continue to grow our sales from our existing customer base. We seek to expand our share of our customers' wallets by broadening the selection of products and services that we offer, as well as improving customer engagement. Okay, great. Acquire new customers. Yep. Leverage our technology and operational efficiencies. Continue to grow our proprietary brands. In 2016, we launched our first hard goods proprietary brand, Frisco. In 2017, we launched 2 consumables proprietary brands, American Journey and Tylee's. Millions of consumers have tried and reordered at least one of our proprietary brands over the years. Our goal is to provide value to our customers by offering proprietary brands with compelling quality and pricing. We believe there is significant room to grow our proprietary brands through continued growth in our current brands and the launch of new ones. Okay. Expand further into pet healthcare. Complementing our existing over-the-counter and veterinary diaring offerings, we launched Chewy Pharmacy in 2018, thereby broadening our pet healthcare offering and providing our customers with a one-stop shop for the prescriptions and special diet needs.
I know that that's a big deal. Like, I know that there's a lot of pets who get overweight really quick.
Sure. Side note, I used to have a dog,
Mhm.
and one thing that I used to do is I used to take my dog to our local vet,
Mhm.
and in the waiting room of my vet was like a pet store. Like they had food, they had medication, and they really wanted me to buy my pet medicine through them. And I
Mhm.
said, that's a conflict of interest. I'm not interested in buying from you.
Right.
Right. And they gave me a prescription, and I went to like 1-800-PET-MEDS was the one that I particularly used. But I can see that being if they have to get a prescription from a vet, some vets might be hard pressed to do that. But again, we'll let the numbers speak for themselves.
Mhm.
We further advanced this goal by launching 2 innovative ventures that are valuable. We launched in 2022, October, we launched a new telehealth service called Connect to a Vet that allows pet parents and veterinarians to leverage the company's proprietary teletriage platform to preserve continuous veterinary care. Chewy makes it possible for pet parents to connect directly with a licensed veterinarian to get answers to some of those commonly asked questions, to receive advice, discuss concerns, and even get referrals to their local vets or emergency clinics. This was followed by the launch of compounding medication in November of 2020. This company is going to score well for optionality for me.
Yes, as well it should.
Providing pet owners with the ability to offer customized pharmaceutical-grade prescription medication that meet the needs of their pets and cannot be fulfilled by commercially available alternatives. I wonder how those are going.
Yeah.
My dog swallowed a needle one time, and we had to race her to like an emergency vet. I wonder if I had a telemedicine option, if I would have been like, we were debating it.
Yeah.
It would have been nice to have a third party to be like, yeah, you need to go to the emergency room right now.
Interesting.
These service offerings advance the company's mission to be the most trusted resource for pet parents.
Way to tie that back in. I like that.
Okay. With veterinarians alike, explore broader platform opportunities. We believe there are additional pet offerings that can drive future growth. Okay. Although we have exclusively focused on US to date, we may expand our offering internationally in the future. I bet the stock will pop when they say we're going to Canada, UK, whatever. Okay. Competition. A whole bunch of people. A whole bunch of people.
I've seen in the comments that Woof, the ticker symbol Woof, is Petco. So there you go.
Okay.
And it's only about a quarter of the size market cap.
Petco, PetSmart, Amazon, Walmart, Target, every grocery store. Right? I mean,
yeah, I will say too that Petco has the advantage of being omni-channel, because I don't think that that Chewy has any brick and mortar presence.
Right.
So there's that.
Okay. Seasonality, it's pretty flat, although spending is a little bit higher in the fourth quarter. Pet gifts. Okay. Compensation and benefit, risk factors, etc. Okay. I don't think there's going to be any concentration.
That'd be weird.
That would be weird. Voter concentration.
Vendor concentration.
Sales of products from the company's 3 largest vendors represent 33, and 30% of the company's sales. So 3 largest vendors. So it is going up. So 3 pet suppliers give them a little bit of supplier concentration risk.
How do you think about that?
I mean, they're the buyer, they're not the seller, so
it doesn't bother me a ton.
It's something to note. Okay, so let's go to the most recent quarterly results, and we'll see what we got. Okay. Our mission to be the most convenient destination for pet parents everywhere. Is that the same?
Yep.
Okay. Q3 highlights. Okay, sales $2.21 billion, up 24%. Net sales per active customer, $419, up 15%. So that's like a dollar-based net expansion rate, a retention rate of 115%.
That's impressive. I would love to see that metric over time. I'd be very curious.
That's 130. Maybe it's in the management discussion analysis.
Yeah, I hope so. 20 million active customers.
20 million active customers.
So they got a 15% bump in active customers and a 15% bump in sales per customer.
And
you add those together, that's pretty powerful.
25%, 24.4 million customers. How many pet owners are there in the U.S.?
Well, there's about 100 million households, I think.
Yeah, that sounds about right.
So it's got to be more than 20% of people.
Can this keep going? This can't keep going up at that rate.
Probably not.
Okay, gross margin, 26.4, up 90 basis points year over year. So their gross margin's expanding. Okay, it's very low, but it's expanding. Their net margin, which is margin after taking out all costs, so profits and everything, is negative 1.5%. Their net loss is 32 million. Their adjusted EBITDA, not a metric I like, is 6 million on 2.21 billion in sales. And their adjusted EBITDA margin is 0.3%. Okay.
Let's see where that's going.
So that's nice that they give you the year to date.
Yeah.
Okay. Sales up 24%. Right to net loss. Interesting. Okay. Net cash provided by operating activities. Free cash flow, positive 2.25 million. So that's down substantially, but still positive.
But if you look at the total 9 months, it went from a loss of 45 million to a gain of 122 million. You see that?
Okay, yes,
you were looking at the quarter. I was
Yes.
looking at the year to date.
Okay. Yeah. Okay. So a nice positive swing.
Yep.
Okay. Auto ship customer sales in terms of dollars. So 1.5 billion. So that's 70% of the total. That's great.
Yep.
70% of their total sales are auto shipped.
And the sales year to date have increased 30% for auto ship.
Right. So that's outgrowing the total.
I want to know what do you got to pay? What's the deal with auto ship?
I'm guessing you get some kind of discount.
I am too. But I want to know what it is.
Our pace of active customer acquisition remains above pre-pandemic levels, and we generated another quarter of positive EBITDA. Okay, gross margin expansion, Chewy's mission. Great job saying the mission over and over again. Okay, demand and customer engagement remained strong for the third quarter. Sales were up to 2.4 billion. Okay, all of our metrics were going in the right direction. Amidst this, we retained the significant revenue gains we made last year during the height of the pandemic, and then added meaningful growth on top of that. That ain't easy. Good job, Chewy's. We are bullish on Chewy's future. Okay, 20 million customers, up 15%. The expected lifetime value of the third quarter cohort is 12% higher than the pre-pandemic counterparts. So they're expecting to get higher sales per customer than prior. Okay. At auto ship increased 140 basis points, a company high. Average new order for new to Chewy customer was 6% and 13% higher than the year ago period. Cool. Behavior flow through to NS
Net
pack.
Sales per active customer.
It's a bold
like
move.
That?
Bold move throwing that acronym out there. Net sales per active customer.
Hey, they knew that there was going to be two of us looking at it, and that one would be reading and one would have to do the.
Oh, did they define it somewhere? Okay. We are pleased with the third quarter, 15%. This represents growth of $56, which is a record increase for us. Wow. It's exciting to see NSPAC growth accelerate as the large 2200 cohort matures.
You do have to wonder how much of that is inflation.
Oh, I'm sure some.
At least half.
Their gross margin still went up.
Yeah.
So that's what I care about more. But yeah, even with these gains, we're still only capturing a fraction of the average U.S. pet spend per household from the over 20 million loyal customers who deem Chewy their preferred destination for everything pet. Okay. Connect with a vet now accessible by all customers for a pay-for-consult basis. Cool. 15 hours per day, 365. Cool. Health TAM by launching pet insurance. We recently announced that we'll offer an exclusive suite of pet health insurance and wellness prevention plans, partnering with Trupanion, starting in spring of 2022. This mission has been making pet healthcare more accessible and affordable. No, it's not. That's not your mission. That's a part of your mission. Oh, the mission of Chewy Health. Okay, never mind. I was wrong. making pet health insurance more accessible and affordable. And these insurance and wellness plans are designed to do both. We gotta give pet parents peace of mind to say yes when it comes to taking the best care of the pet. Very cool. Practice Hub continues to gain momentum. Our rollout of Practice Hub is continuing to generate buzz and interest in the industry. As a reminder, with Practice Hub, we have designed a complete e-commerce solution for veterinarians that can be integrated with their existing practice management software. Using our proprietary app, vets can easily create pre-approved and manage RX and vet diet prescriptions all in one place. Then they can earn revenue as a seller on our marketplace when customers place an order in clinic or purchase their items at home on chewy.com, with Chewy handling everything. So download this app if you're a vet.
Yeah.
We'll do the fulfillment and we'll give you a cut of the revenue.
Let me tell you what I think of that. I think financially it makes a lot of sense to offer that to veterinarians. At the same time, I see a lot of conflicts of interest. Like, I can see authorities getting involved in that. I see brand value potentially being damaged by that. It's a little messy.
Mm-hmm. Worth noting. Anyway, veterinary practices are key stakeholders.
Oh, yes.
Right. And I know that, for example, Trupanion, which I've researched before, Trupanion, their software integrates directly into the practice.
Yep.
And they get to pay claims like instantaneously.
Yep.
So don't overlook that. That sounds very cool.
See, because here's the thing, because I think it's important. I think you're right. I think that there is huge upside to it. I think that we need to, like, Trupanion has been in short sellers' crosshairs for years because of the conflicts of interest and regulations that revolve around this. So, I mean, it's just important to understand the upside and the downside of a rollout like that.
Fair enough. Okay, so it says Practice Hub is only in 50 clinics on an invitation-only basis. So they're still in the rollout phase. That is very smart. When evaluating the potential contribution with $35 billion pet TAM, it's worth emphasizing that presently less than 15% of Chewy customers are Chewy Health customers. So 85% of their customers are not buying from them. Okay. Right. Not to mention the opportunity for pet parents who are not yet Chewy customers. Integrating new health services like insurance, wellness plans, connect with a vet, Practice Hub from our existing pharmacy. We have nearly tripled our run rate pharmaceutical revenue over the short 10 quarters period since our IPO. That helped us drive deeper penetration. Great.
There's no doubt that there's optionality here.
And they're doing a great job with it. Yeah. That we continue to manage Chewy for the long term by looking beyond near-term noise of the macro environment and sticking with the strategic roadmap. Okay. Growing our private label brands. We have nearly doubled our customer base, increased NSPAC, net sales per active customer, by 30%. Our private label catalog has more than quadrupled, and penetration into the hard good business has increased nearly 20%. As we outlined earlier in the progress we're making with Chewy Health with our B2B and B2C offerings to customers and veterinarians. We offered rapid growing, multi-dimension, customers stickier. We haven't made any announcements yet on the last two roadmap commitments. Non-vet services and international expansions both remain a question of when and not if.
What does non-vet services mean to you?
That means pet grooming.
Okay. Got it.
That would be washing.
Brushing teeth.
Boarding.
Oh, yeah. Okay. All right.
Potentially. Yeah, pets have lots of costs to them.
Yeah. Well, there you go.
We have accomplished a lot, and we're about to be... Okay, cool. So sales up. Oh, they've stalled in 20. So I'm guessing the high growth is about to slow down. They're still penetrating more. Great. Gross margin. Great job increasing that. How much higher can that go? I don't know. But it's increasing. It's very low overall. Net loss down. Adjusted EBITDA is positive. Net cash provided by operating activities.
I mean, that's really good.
This isn't free cash flow, but it's a good sign. So what's the big delta there?
Well, but the free cash flow is actually, if Stockcard was right, about 170 million. Well, weird. Okay. Well, so that can't be right.
Is this by the quarter, though? No, it said it above. Okay. 727 in cash. Okay, so cash, 726 million in cash, a whole bunch of inventories, a whole bunch of accounts receivable. Okay, the bad stuff, trade account payables, 1 billion in payables, and accrued expenses, 1.7 billion in current liabilities. That's more than their current assets. So it depends on how long you can delay those bills for. No long-term debt,
No long-term debt.
but yeah, no long-term debt, but not my favorite balance sheet.
What does the cash flow statement look like? Or actually, I want to see this too, because
yeah,
how much are they
actually,
spending on selling?
well, this must be just overhead. It says selling.
How weird,
Adver-
because advertising and marketing is.
Why wouldn't you put selling, advertising, and marketing all together there? But okay. So if you assume that this is customer acquisition cost, very good.
Yeah, it's pretty low.
I mean, G&A is got to be a huge chunk of that. How do they break that out? I'm going to consider this advertising and marketing, and this divided by this is pretty low.
Yeah, it is pretty low. And
So
that's actually quite impressive.
Yep.
Given how fast they've grown.
On a dilution basis, what's that? 8 million shares, so 2%. 2% dilution, also acceptable. Okay, balance sheet, 30-week, 9-week ending. Okay, net loss was 10. 64 million in stock-based comp. Yeah, and that's on a few billion in sales. And how much in gross profit? Sorry to.
That's okay.
Around. Gross profit 584. 39-week, 1.7 billion, 1.8 billion in gross profit, and only 64 million in stock-based compensation. So very acceptable. Okay, what are the source of inventories? Are a drain. Accounts receivable is a drain. Prepaid expenses is a drain. Trades account payable is a source. All right, so net working capital is positive.
That's not a very sustainable.
That's not. Cap expenditures 135.
They're spending a lot.
They are to grow out that network.
Yeah, I'm hoping that's for their distributions. I pulled up their website to look at. They have a lot of distribution centers.
Okay. And eventually they'll reach a point when they don't need to build anymore.
Right.
They'll just go into maintenance
Amazon type thing.
Right. All right. So just be aware of that. They have
the 15 distribution centers by my count, or fulfillment centers by my count, spread out, although there's a ton in Pennsylvania. I wonder if that's where they're located.
Strictly from a definition perspective, though, they are generating 120 million in positive free cash flow. It's just that the source of that free cash flow is trades account payables. And well, I guess half of it is stock-based compensation. So I'm going to give them credit as being free cash flow positive, but I'm not thrilled about it.
Yeah.
Okay, those are the differences between the two. Net cash provided by operating activities and capital expenditures, so free cash flow. So they use the same definition. Okay, for the year, that much growth. Fourth quarter, it's going to slow considerably. For the full year, 25%. Okay. What else do we want to look at here? Ownership. Okay, so this is the proxy statement as of May 27th.
After that divestiture by PetSmart? Is that who it was?
Yeah. Beneficial.
This is one of those times where beneficial didn't work for us. Ooh, yeah. That's not good.
Wrong button. I want to zoom in. There we go. Okay. Sumit Singh. I'm going to assume that's the CEO. 420,000. What's the share price? $40?
I can't remember. I'll look it up.
$40. So 1.6, $16 million. Okay. Insiders as a group own 1.3%. That's not all that surprising given this company's history.
Corporate history, yeah.
Right? BC Partners Holdings owns, they own 16% of shares outstanding, but
they control all the voting.
100% of the Class B stock. So what BC Partners wants, BC Partners gets.
Now, but here's the thing. Did they still own that? Because I thought that they said that they distributed all of those to their shareholders.
That was PetSmart.
But PetSmart was owned in part by BC Partners.
Oh, you're right. Well, this is as of May. So I guess
okay.
that's the question that's up in the air.
Yeah. All right.
I
Well, that's something to investigate.
We'll have to go into the most recent 10K, but this is just a proxy statement. So anyway, that is worth noting. Okay, executive management team. Sumit Singh. Okay,
You're right.
It's the
Where he
CEO
worked.
since 2018. From 2017, he was COO. Before that, he was Amazon's consumer business. And from 2013, he was Amazon's. So he was at Amazon for 4 years. They was hired in 2017 and then become CEO in 2018. Okay. He was at Dell, Punjab Technology University in India. Okay, cool. CFO, he's been with the company since 2015. Great. So he went through all that ownership stuff with them. General counsel 2014. Satish Mehta is 2018. Okay, let's look at the board. Board of directors. Raymond Svider.
BC Partners.
Partner and chairman of BC Partners and is chairman of the executive committee. Yeah. Okay. He currently holds the role of non-executive chairman of PetSmart LLC, chairman of the board of Valtech, and serves on the board of Altus, Epgate, Cytera. Wow. Inostat. He is on a lot of boards.
Yeah, I'll say.
Okay. Sumit Singh, partner at BC. Yeah. Partner at BC. They are the board. Lehman's, principal at BC Partners.
Good Lord.
BC Partners. Global CEO of Global Net Lease. Okay.
This is a huge board.
And BC Partners.
Mostly BC Partner people.
And yeah. Well, this hasn't changed. So they still are. It's a controlled company in that respect.
On the board.
Yeah.
For sure.
Okay. So let's go to Chewy's. Chewy. Okay, 35% off your first order, 5% off repeat orders. There you go.
All right.
So
now, do you pay for that? Do you pay to be a part of AutoShip? Or do you just sign up for it?
Oh, I assume it's just sign up, like Shop and Save.
So it's not like Amazon Prime.
Right. Up to $20 plus 5% off. Flexible, real-time vet advice. Always have it covered. Connect with a vet, so they're pushing that. So food, treats.
Our friend Dave Drum points out that Chewy says veterinarians available on Connect with a Vet cannot diagnose or treat medical conditions or prescribe medication. So maybe they're just there to answer that question that you talked about.
Yeah, that makes sense. Very, very similar to a regular telehealth medicine, right? They can't. They can. Well, actually, over that, they can give you. They can diagnose and they can give you. Yeah, I would assume it's pretty limited since they can't touch the pet, but it's more like a second opinion than anything else. Okay, so this is their toys, 1 to 3 day shipping, over $49. It's free. Under $50, it's a flat rate fee. Give back. Okay, let's go to Glassdoor. Chewy. Chewy on Glassdoor. What do people think of Chewy?
Is Glassdoor being slow for us today?
I guess so. 2.4 average salaries. The average Chewy sales range was $39,000 for a warehouse associate to $182,000 for a software development manager.
All right.
Come on. Okay. At Chewy, our mission is to become the most trusted and convenient destination for pet parents everywhere.
10 for 10.
It's at least you're consistent.
Ooh.
Ooh is right.
Ooh, those are really bad scores.
What do people like? People don't like senior management. That got one of the best scores.
Right. I'm saying that's what they do like. They like diversity and inclusion.
They don't like the company's culture or values.
Can you?
Okay.
What do some of these reviews say? Oh, and that's up. Oh my goodness. 3.3 is good compared to the past.
Yeah. Senior management up. It used to be a 2.
That's really bad.
So you pay us you pay us well, but we hate working here.
Man.
Positive business outlook. CEO approval. Oof. These are
The recommend to a friend, to me, that tells it all.
yeah. Would you recommend this to a friend? Half of them would. That's pretty bad.
Yeah, it is.
What do the reviews say? Not as I like Chew fun time walking with Chewy. What?
Don't understand.
Not as I like Chew fun time walking with Chewy. I
No
don't get
idea.
what that means, but that's a really popular review. Long hours to fulfill customer satisfaction. Upper management failure to recognize and highest talent. Dead end job. Everyone is petty. It's an extension of high school. Scheduled structure that might affect work-life balance. Okay. People who love pets can be really great. I get to hear from pet parents about their day. Okay.
I mean,
The
those
ratings there
benefits
ain't gonna
more
be
have to do with
so-
the basis of the business than they do the company itself.
Yeah. Okay. How the company done versus Wall Street's estimates? Big miss, big miss, big beat, big beat. That's a 0. That's a 0 to me. And for next year, for what it's worth, estimate is 19% growth. So 20% growth this year, 19% growth. And since we're here, this is a current year $9 billion in sales. Next year 10, trading at 18 times. So the price to sales ratio is low. Don't let that fool you. This is a company with a 20-something% gross margin. So let's just look. So gross profit is 2.3 billion over the last 12 months, and this is a $19 billion company. So trading at about 9 times gross profit. So that's a better gauge.
Yeah.
That's not.
It's not terrible.
It's not crazy expensive. It's not dirt cheap though.
It's about 100 times free cash flow, but even that's not a very reliable.
Yeah. The earnings here, the earnings and the PE ratio won't matter.
Nope.
Because it's too early. If you're going to look at one, it's 175 times forward earnings. Okay, I think I'm ready. You ready?
Yep, I'm ready.
Okay, so today's date is 1/13/2022. Okay, financial resilience.
727, 0.
Okay, but
however, you didn't like the working.
Yeah, I didn't like the working capital nature of the business. The company's balance sheet was not. The company has more liabilities than assets, right? Or maybe while the cash to debt ratio is good, I'm not giving them full credit for balance sheet. I'll give you 3 there. Gross margin, very low, but it is rising. You get 1 point. Returns on capital, low, but they're rising. Free cash flow, I'll give you full credit for free cash flow. That's being generous. And earnings per share, you're right on the cusp of earnings per share. So I'll give you a 1 there. I'm okay with that. Okay.
Here's the section that matters the most.
That's right. Network effect? No.
No.
Product ecosystem. If you're using one product, does all the other products that you're using become more useful? This one is mostly about Apple, right? Apple's a hardware maker, but if you have an iPhone, your iPad works with it.
To me, that goes into switching costs more than anything else.
Yeah, okay. So switching costs. Once you get set up on auto ship, is it a hassle to turn that off? Once you get your pet prescription set up, is it a hassle to turn off? For sure.
And even if it wasn't, the automatic, convenient nature of it. This is the Netflix thing. It's the sneaky switching costs. Like, I might not watch Netflix for months, but I'm still going to pay.
Right. So I'm going to break this up because I'm not giving them full credit. But I'll give them 8 points for there. The durable cost advantage. I'll give you
I think I said 15 fulfillment centers.
2 points for that. Even that might be. I'm gonna give you any points for that. I'm gonna give you no points for that, but I will give you 5 points for your brand. I think people like the Chewy's brand.
Yeah, that spending on marketing and advertisement was very low.
Do they have counter positioning? This one would be interesting. In a world where Amazon and Walmart.com and all those things did not exist, the answer would be yes.
Mm-hmm.
However, because they would have counter positioning versus their biggest competitors, which would be other pet food suppliers. However, those competitors do exist. So e-commerce food delivery of dog food is not, that's not a competitive advantage. And how's the moat doing? The moat is widening. I'll give you 4 points for that. So that's a 17 out of 20 on moat. Yeah, that's pretty good. Customers. Optionality. Great job. 6 out of 7. Great job. It might even be a 7 out of 7. Organic revenue growth runway. Well, it's definitely above 15%. So I'll give you 4 points there. Are they the top dog? And first mover in an important industry. I have to believe that they're the top dog in pet food supply to your door with 20 million.
Yeah.
I'll give you 2. I'll give you 2 points there because there are plenty of competitors in there. And do you have operating leverage ahead? Yes, a whole bunch. They're at a 0% margin right now, so that could go higher. Great. Customer acquisition costs, pretty good. They were pretty good. I'll go 4. That might be off because we don't know what the selling percentage is there. But overall, it was a low percentage of gross profit. I'll go 3. I'll go 3 on that. Dependence, recession proof. Is revenue recurring? Yes. Almost all of it. 4 out of 5. Pricing power. 2.
It's tough to know. Again, that's hard. That's really hard to know.
Do people go to Chewy's for the convenience and the brand, or do they go there for the price?
Probably both.
Yeah. I mean, the gross margin is rising. I'll give you 3. Soul in the game. The CEO joined in 2017. So this is his 5th year. So I'll give you 2 for that. Inside ownership, it's kind of a joke.
Yeah.
That's just the nature of the business. If I could give them a half a point, I would. But I'll go 1. Glassdoor ratings, 0.
Yeah.
I'm going to give you 0 on the Glassdoor. And on the mission, I'll give you 2 out of 3. How has the stock done since coming public? I think it's
underperforming.
Underperforming the market. So a 0 there. Are they buying back stock, paying a rising dividend, or anything like that? Nope. And on beating expectations, they are 2 on, 2 off at the 61 total. Accounting irregularities, nope. Customer concentration, nope. Industry disruption, nope. Outside forces, nope. Big market loser, nope. Binary event, nope. Dilution, nope. Growth by acquisition, nope. Complicated financials, antitrust, headquarters, and currency risk, no. So overall 60, overall 61. They could significantly grow higher once they turn profitable. And if they can, if the stock starts to beat the market and if they continue to outscore Wall Street's estimates. But some of those are just negative scores against them. So this is yet another stock I don't want to vote against. Never betting against this company. I'm just not going to bet on it. Okay, for you.
All right. So for the mission statement, I'm going to give them 1 point. Just not inspirational. So for the moat, I'm actually going to give them more points than I thought I would, because I'm going to give them 2 points for switching costs. I think auto ship and all those add-ons, I'll give them 2. Now I'm going to give them 1 point for low cost production, but I'm going to say this. That's something that I need to research more, because I need to understand fulfillment centers' capabilities. I need to understand what Amazon's share of this market is. I need to understand what PetSmart is able to do. Like, is their omni-channel going to be comparable? So that's with an asterisk, and I will give them a point for their brand. So 4 total.
Pretty good score.
It is. And I'm also going to give them 2.5 if I can for their optionality, because I'm impressed by everything they've branched out into.
For sure.
I will give them I'm going to give them a half point for financial fortitude for the same reasons that you talked about. For concentration, I'll leave it as it is. There is that supplier concentration, but I'm not too worried. Now, Glassdoor, I'm going to take a point off. Founder is not involved, and ownership, I'm going to take a point off. I mean, this score reflects how I feel about the company. Most times, I feel like the two most important things are the moat and the optionality. On that, this
Great
is
job.
through the roof. This
Yep.
is super. This is super. But on everything else, I am left very underwhelmed. So that's where I land with it.
Yep. To me, this looks like from the outside, a compounding machine that I think would be. I understand why people are betting on this. And I really hate to put this in my thumbs down portfolio. I would never bet against this company in real life, but it's just one that I would put into my why bother category. Like it wouldn't crack my top 50 investing ideas. So why would I buy it?
See,
That
for
kind of
me,
thing.
this is one of those things where when you have upstarts coming in, like PetSmart and Bark and those, maybe not PetSmart, it was Petco. I feel like if this was founder led by a person who had a vision and was able to inspire people by this vision, I could get on board with it. I actually don't have a problem putting this in my thumbs down fragile category, because without, like, that's the special sauce that makes something matter to people. And without that, I'm underwhelmed.
So the bad news is our thumbs up portfolios are doing terrible. The good news is our thumbs down portfolio are doing more terrible.
Yeah, all right.
Which means the companies that do not fit our quality are down more than our companies that we said fit the quality, which is the entire point of our exercise. It's to nudge our portfolios higher.
We're going to wait till 2024 to draw some hard and fast conclusions.
Oh, for sure. And for our listeners, we also have a competition going on to beat our 5 stock picks for 2022, and the winner gets $1,000. So head on over to stockcard.io if you're interested in joining.
I believe we're closing in on 400 portfolios in that too. So you get serious bragging rights if you beat us and everybody else too.
Yeah. Is an omni-channel like Woof a better model for pet care? It's entirely possible. Are they more than just PetSmart? There used to be a Tucker Woof that was like veterinary centers, like VNA Anatech, but I think they got bought out.
Okay.
Would you add any points for insider purchases in the last few months? Says Adam Nelson. I would not.
No.
Yeah. Brandon, but if that's a positive, that inside ownership, inside buying is definitely a positive sign.
Sure.
Like it's definitely a positive sign. You buy a stock for one reason. Weird ownership structure, bad Glassdoor. It's all about execution, and I have a massive question about management.
See, and that's exactly what I mean. If you had someone who is like look at Zoom. Eric Yuan loves, you know what? We don't work at Zoom. We don't know Eric Yuan, but from any information that we have available to us, he loves doing what he does. Like he sent you and I messages when we've written about Zoom before via LinkedIn. And I don't care if he's got someone doing that. Like he loves this. I don't see that here.
That's baked into the optionality grade. Yep, pet insurance. Man, they're giving so many points on the board here. It's probably better than the business. The grades are absolutely accurate with the current state of the business. Thank you. Thank you for that. Glad you agreed. Some pricing power for auto ship. Small increases aren't going to cause cancellation. Yeah, that's a fair point.
Yeah, that is a fair
Adam,
point.
Woof has a gross margin of 42% and a price to sales ratio of 0.85, glowing revenue to 20%. Yes, those would be more compelling numbers than the ones we just went through on this.
And Woof has that gross margin. That's very interesting. Okay.
Is Glassdoor ever tampered with? That's the thing.
All the time.
Yeah, I mean, are they gamed? Of course.
But that was 1.7. That was 1,700 reviews.
Yep. It's also better than nothing.
Yep.
I think those are the worst Glassdoor ratings in the history of the channel.
I think so.
Just about. It's a VC controlling. Great. Yeah. What is the value of telehealth to Chewy? Veterinarians cannot diagnose or treat. Thank you for that. Thank you. Ryan Coley. I love Ryan Coley, Chewy, and GM. Ryan Coley, I think, was the guy. I think that was the guy that had something to do with GameStop, or he founded it or something like that.
Okay. Now, Brian, before we sign off, I think we need to get that last comment on the screen.
Which one?
What's a better choice? Buying your book on Amazon or buying a share of Amazon?
Buying a share of Amazon.
Although your book is way cheaper than a share of Amazon.
That is true. That is true. Sorry, I'm scrolling way up. I love Chewy, but I'm afraid of Bark and Woof. Bark is BarkBox, and I know they're getting into pet food. They started out as kind of like Stitch Fix, but for like pet toys and stuff like that. And the attrition rate's pretty bad, but they're getting into other things.
Now, Andres has a question real quick that I think we should get to. Can this company come back to $70 to $75? And to remember, this is $47 right now. So that would be a pretty big jump. In 6 to 9 months, I feel like supply shortages and freight delays will ease as COVID will slowly fade away. But here's the thing. I didn't see anything in there about supply shortages hurting the business at all.
It's possible they mentioned that in the conference call. And they also posted growth of 25%, which is pretty good.
Yeah.
So but that is a possibility. Although if that was the case, inventory would be going down,
right?
Not up,
right?
Although they're also building out those centers, so they have to. That's going to naturally lead to an increase in inventory. But so maybe each inventory location is lower. So I would say I'm going to mentally say that all that kind of washes out right now.
I think the other really important thing to say to Andres is that 6 to 9 months, anything can happen. Anything can happen. So that's why we say 3 to 5 years minimum.
Yeah.
Could it go to that? Sure.
I think that's a super chat, a super sticker.
It's our first one. Hey, way to go.
There you go. Awesome. Thank you from that. And yes, you could buy my book on Amazon. Thank you all so much for watching. This is a fascinating company to watch. And we'll do a short video on what we learned in the coming weeks. I'm Brian. That's Brian. Thanks so much. See you next time. Brian's out.